In the glow of 100 screens, a young woman hunts for opportunity. Her eyes are sharp, her mind relentless. But in this world, every perfect setup could be a trap, set by unseen hands. Tonight, she faces the market's most dangerous illusion, the breakout that lures, then destroys. Chloe is no ordinary trader. She reads the chaos, but tonight, the market reads her. Her education was forged in charts, financial news, and online communities. Ambitious, intelligent, and relentless. She saw a living puzzle, not just numbers. Her day began with the electric hum of her screens. Every flicker, a story. Buyers versus sellers, hope versus fear. To Chloe, this world felt like home, limitless opportunity. Then came a symphony of signals, a setup so perfect it felt unreal. And when it seems too good to be true, it often is. The stock was called Innovate Corp. It had been consolidating in a tight, predictable range, like a coiled spring building potential energy. Every indicator Chloe trusted screamed buy. Price pressed a ceiling that had held before. A break would signal a powerful uptrend. A plausible bullish catalyst fueled the story. Textbook perfection. On paper. Heart steady, plan defined, entry, target, stop loss. Price ripped through resistance on exploding volume. She executed. She was in. Profit climbed. $1, $2, $3 above entry. Validation for all the work. Euphoria. Then, the momentum stalled. Subtle, then sudden. Price plunged back below the breakout level. Profits evaporated into a growing loss. Instantly. What just happened? To understand Chloe's loss, meet the market's hidden architects. The market makers. Think of them as financial wholesalers. They don't bet on direction. They sell liquidity. Always ready to buy when you sell, and sell when you buy. Large institutions often play this role. They maintain a continuous two-sided market, bid and ask. The spread is their legitimate bread and butter, scaled by volume. They mitigate risk with sophisticated tools and a privileged view of order flow. They can infer where stops cluster, immense informational power. While providing liquidity, they still pursue profit, sometimes anticipating, even influencing, crowd behavior. Chloe had wandered into their playground. The trap has a name, the fake breakout, or bull trap, an old, effective tactic aimed at predictable breakout entries. Break above key resistance, volume spike, crowd piles in, then the initiators flip, selling into the top, unloading inventory, price collapses below the breakout, trapping late buyers. The pattern was an illusion, a manufactured spike. In minutes, wealth transfers to the players who set the bait. Another tactic, stop-loss hunting, targeting your safety net. Most stops sit at obvious technical levels, predictably clustered. Market makers read the map. Pools of guaranteed sell orders. They push price into the cluster, triggering a cascade. More selling begets more selling, until the pocket is emptied. Then price snaps back up. The original trend resumes, without you. The bid-ask spread. Legit profit, but sometimes a subtle weapon. In volatility, spreads can widen dramatically. A wider ask fills you higher. Instant unrealized loss. Round trip without price moving. Execution drained you. Stops can trigger on quote games even when prints don't match. Targets can be missed if only the ask flashes without follow-through. Spread manipulation, the invisible thief. Back to Innovate Corp, 98-100 range for a week. Breakout buys queued above the round number. Stops clustered just under the flip to support. Trigger the breakout, let the crowd push to 101, 102. At the top, inventory dumps into demand. Flip the tape, widen quotes, sweep stops at 99.50. Buy back lower, round trip profit secured. Success isn't just winning, it's avoiding engineered losses. Start with healthy skepticism. If it looks too perfect, draws hype, and everyone sees it, be cautious. Wait for confirmation. Breakout, retest, hold, bounce. Fake breakouts have weak continuing volume, real ones sustain it. Don't park stops with the crowd. Use volatility-based stops outside noise. You can't outmuscle market makers, outmaneuver them. Be selective. You don't have to trade every day. Wait for asymmetric opportunities. Study fake breakouts, stop hunts, spreads. Read the tape, learn the story. Risk little per trade. Always use stops. Never let a small loss become catastrophic.